This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on October 28th, 2011. Our time, 8:42. That's Mountain, 10:42 Eastern. Radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, catch us archived online. Harold's website is HESradio.com, HESradio.com. He also has rarecoloreddiamonds.com. We'll talk about that later in the show. And a happy birthday to Harold, had a birthday, and Mark Patterson, our audio engineer, he had a birthday as well. The birthday boys here on a Friday morning. Strong week for the metals. Of course, the EU set a 50% Greek write-down and $1.4 trillion in their debt fight. But a lot of people believe that still that's not enough. It helps out Greece, but doesn't help out Portugal, Spain, Italy. There still is some major work to be done. This situation, the sovereign debt crisis, is not over by a long shot, Harold.
No, it is not. And by the way, thank you very, very much for the birthday wishes. And I do wish Mark a very happy birthday also. All in all, when the news came out on Thursday that they did come up with this short-term deal, the markets responded very kindly. All the markets looked very strong. The stock markets around the world moved up. The metals markets move up. Gold moved up substantially. Silver was up almost $2 on the day on Thursday, and we're trading all the way back up to the 35-38 level. Gold is trading all the way back up at 1750. So the markets came back very strong. They've been building a very strong base over the past month, recovering from that huge downturn when the market went from $44 down to $26. It was at $26. It started building a base again. Now the market's back up to 35 and change and looking very good. The other thing about the gold and silver markets is that you have to watch the commitment of traders report, and it comes out and it tells you how many short positions are in the market. That's something that's extremely important for shorter-term trading. And what we did notice, that when the market did fall, that there was a huge short position in the market. Well, that position is now gone. Means that when the market fell to $26, the shorts got out of the market, they took their profits, and now the market's coming back very strong. Again, there's short-term traders in the metals markets. There's long-term buy and hold in the metals markets, and that's what we recommend, is a longer-term buy and hold. If you trade in and out of the market and you're heavily leveraged, you're going to have issues. But if you only metal outright, you're just going to be in the market for the appropriate period of time. And again, we anticipate much higher prices in gold and silver. So at this particular point, the gold market is sitting right now at about $1,750. We did see the high of the year at $1,900. We do have a very good chance of seeing that $1,900 level taken out by the end of the year. So we are anticipating the last quarter of this year that gold should stage a fairly strong rally and get back very close to that $1,900 level, and it could actually break that. If it doesn't break it this year, we should see in the first quarter of next year probably very close to $2,000 gold, and again, we have an outside chance of hitting it by the end of this year also. Silver, which again has gone from $26 about a month ago to $35 at this point. We've seen a $9 to $10 move in the price of silver. And the most important thing is that, again, these shorts are out of the market, and silver is building a very strong base. Of all the metals, I believe that silver will make the most amount of money percentage-wise for listeners that are in that market. And again, we recommend holding the physical silver market because we anticipate being in this market for at least another 5 years. We've been in the silver market for 10 years now. We first started buying silver when it was at around $4, and it recently has hit $50. Then we saw some extreme volatility when the market fell from $50 down to $34, back up to $44, down to $26, and now back up to the $35, $36 level. Again, not only do we anticipate that the price of silver will come back and test that $50 level again, which was the all-time high for silver back in 1980, we do anticipate that the price of silver over the next 5 years will skyrocket. And I do believe that we will see silver prices in the triple digits, meaning $100 to $200 silver is certainly not out of the cards. The other thing that's happened this week is that the price of oil has skyrocketed. Oil is now trading at close to $95. Again, this is a market that we have recommended for many, many years and suggested that you put oil, fairly high-quality oil companies, in your retirement savings plan. Again, the price of oil has been volatile, but oil at one time in 2008 traded as high as $150, if you remember. Then due to the government situations and the sell-offs because of Lehman and the stock markets plummeting and the financial debacle, it fell all the way down to the $50 level. So it went from 150 all the way down to 50 in just a couple days. But when you manipulate a market like metals, like oil, like those type of markets, and the trend is still intact, which it is, again, all you're doing is delaying the inevitable. The markets are going to always come back to where they were supposed to be. We do anticipate much higher prices in oil, and we do think that oil will attempt, possibly sometime next year, that $130 to $150 level. The other situation that happened is that the euro rallied very strong on Thursday. In fact, the euro is the currency that should get hurt the most from the situation in Europe. However, the euro just broke through the 140 level, which is a very, very important resistance level for the euro. Not that I'm bullish on the euro, but again, it certainly proves that the euro, no matter how much trouble it's in, is still a stronger currency, believe it or not, than the U.S. dollar, which fell more than a full penny yesterday. So again, we watch the U.S. dollar very, very closely. U.S. dollar is trading at 75 cents today on Friday as we're taping the show. However, there is very heavy support in the market at 71.50 in the U.S. dollar. If the U.S. dollar breaks 71.50, which I believe it will do, that's when the U.S. dollar will start to crumble and start to sell off substantially. To see the U.S. dollar fall down into the 60 and 50 cent level over the next few years, I believe is a real situation. We know that the Federal Reserve is going to keep interest rates basically at zero, so that means that unless they raise interest rates to fight inflation, we're going to see a very, very weak U.S. dollar. So again, as the U.S. dollar continues to fall, gold and silver prices will continue to climb. Now, as far as the euro, the bailout in Greece, I agree with what Randy certainly said at the beginning of the show, and all they're doing is buying time. They did not correct the problem, and the euro will not survive this situation. Even though the euro did rally strong this week and did break above that 140 level, the fact is that the euro is a doomed currency, and there's no doubt in my mind that within 2 years that there probably will not be a euro currency. However, at this particular point, all they did in Greece at this time was delayed the inevitable, because the bottom line is they did not correct what the problem is. All they did is threw a ton of money, reduce the debt, and basically there's several other countries in Europe that are just as bad a situation as Greece is. So at this particular point, due to the fact that over the short term they have at least calm down the situation in Europe, the sovereign debt situation, what it will do at this point is, I think, rally the stock market over the short term. I think that certain investors, not the smaller investor shouldn't even be in the stock markets at this particular time. They're just way too risky. But you've got these hedge funds that have a ton of cash sitting on the sidelines, and now that the situation in Europe has eased slightly, I think that you will see another rally in the stock market, at least with a bunch of this money going in. Next year, I do anticipate that we could see a severe market downturn. So again, my feelings on the market have not changed an iota. I think that the stock market is too risky for the small investor, especially for you to put your retirement funds in a market that is up 300 points one day and down 200 points the next. So all in all, again, we're looking at a situation right now where the metals look very, very strong. I think that we've seen the bottom of the market in silver at 26, and we saw the bottom of the market in gold when it broke the $1,600 level down into the mid-15s. I think we'll get a strong rally in gold and silver going into the last quarter of this year, and then we should see a very strong situation next year. 2012 could be one of the most difficult and concerning years that we've ever had before, and for that reason, I am coming to Edmonton on November the 28th to do a seminar. It's going to be at the Fantasyland Hotel at the West Edmonton Mall on Monday night at 6:30. We announced the seminar last week, and 600 people have signed up for it already. I'm ecstatic that many people are interested in coming to listen to us speak. And again, I can't wait to come to Edmonton and see our clients and our friends. So again, on November the 28th, it's a Monday evening at 6:30. It's a free seminar. With this economy, I don't want anybody coming to pay to see us, to listen to us speak. It's very, very important that you understand what's happening in the world financial markets so you can plan what you're going to do financially. These are the most difficult times that we've ever been through, short of the Great Depression in the 30s. These are extreme times, and again, we feel it's extremely important that you understand what the possible ramifications are in the markets going forward over the next 4 to 5 years. So we are coming to Edmonton on November 28th, 6:30 at the Fantasyland Hotel. The tickets are free, and all you have to do is go to my website, HESradio.com, HESradio.com, and sign up for your free tickets. Now, I will be there for Monday, doing the seminar Monday night and Tuesday all day. I will be seeing clients and potential new clients that are interested in learning about investing in rare-colored diamonds. So again, if you do want to set up an appointment, you can go to HES Radio, and you can literally sit down with me for an hour, and I'll answer any of your questions and help you all that I possibly can. So again, I'm looking forward to seeing everybody in Edmonton, coming all the way up from South Florida. It's a long trip, but again, I've got a lot of friends and clients up in Edmonton, and I'm truly looking forward to the seminar.
Thanks to everyone who has signed up so far. Here I was thinking it'd only be my mother and Mark and his daughter. But no, you like us. You really like us, as Sally Field says. To invest in precious metals, there's only one company that Harold recommends. That is Worldwide Precious Metals. The telephone number, 1-866-623-2002, 1-866-623-2002. The website, wwpmc.com. When it comes to investing in precious metals, they will help you start your own precious metals investment account today. Speak with them. This week, interesting article from Neil Reynolds. It was in the Globe and Mail, October 25th, 2011. We have a quote from it in the newsletter. In 1900, $1 bought you 14 loaves of bread. In 2010, it bought 16 slices from one 20-slice loaf. That's why you need to be involved in hard assets. We can see what's happening to paper, fiat money. It's obviously depreciating over time and will continue to do so. A quote from Charlie Munger, who obviously works with Warren Buffett at Berkshire Hathaway on the EU debt crisis. He said they have to stop shooting at this elephant with a pea shooter. Also, a Greek trader was quoted this week as saying, basically, the painful part of austerity hasn't even hit yet. Nobody in Europe has any idea what's going on, and social strife, it seems bad now, will become a daily issue. And as I mentioned off the top of the show, the EU set a 50% haircut for the banks, 50% Greek write-down. They actually were able to get $1 trillion, $1.4 trillion US dollars, and they persuaded European bondholders to take 50% losses on Greek debt and boost the firepower of the rescue fund to $1.4 trillion. And it was interesting because Ken Rogoff, who is a Harvard University economist, he really believes that they don't have any end game in mind here. He was at a Bloomberg summit, and he says it's pretty darn clear the euro does not work, and they do not have an end game. Also, a monster prediction from the Bank of America. Another U.S. debt downgrade is coming in just a few weeks. The credit rating agencies have strongly suggested that further rating cuts are likely if Congress does not come up with a credible long-term plan. Hence, we expect at least one credit downgrade in late November or early December when the super committee crashes. And that was one of the stories we found this week from Bloomberg. They said this U.S. super committee is flirting with failure. Obviously, the Democrats want to raise taxes. The Republicans don't. An interesting stat as well, fewer than 1 in 4 Americans trust the U.S. financial system. Americans are growing even more distrustful of their financial institutions. The latest figures from the quarterly Chicago Booth Kellogg School Financial Trust Index shows that only 23% of those surveyed said they trust the country's financial systems, down from 25% in June. The index measures trust in 4 areas: banks, the stock market, mutual funds, and large corporations. Also, Janet Yellen, she's the Fed Reserve Vice Chairman, said that a third round of quantitative easing might be warranted if the U.S. economy is challenged continually by unemployment and financial turmoil. And it would not surprise me in the least, Harold, if we do see quantitative easing 3 at some point.
Well, I think we will see it also. They may call it something different, but they need it. And the fact is that the economy in the United States has not gotten any better. They put trillions of dollars back into the economy, and basically the economy has not gotten any better. 1 out of every 6 Americans live in poverty, and 45 million American children live in poverty. So the fact is that the real estate market is still abysmal here, and until the real estate prices start to go up, people, meaning the general public, the middle class America, will not spend money. They don't have any money because most people's wealth is in their home. And basically, when their home prices fell, by more than 50%, and they had those bad loans, those interest-only loans type of things, those LIBOR loans, they ended up getting killed. So there's no chance that unless something happens in real estate and all of a sudden that market turns around, in my opinion, the chance of a recovery in the United States is slim to next to none at this point. They owe $15 trillion, a lot of it to China. The fact is that the job markets are not getting any better. People are very dejected in the United States. You've got that Wall Street movement that's going on that started off as a peaceful presentation or demonstration, is now got legs and is in 50 different cities in the United States and in different countries around the world. They start off peaceful, but people are getting very, very frustrated, especially people that have no jobs and their value of their homes have plummeted as Wall Street is getting richer and richer. The major thing that we really need to be concerned about is inflation, and that's where you should really concentrate on what the future is going to be and what your investment should be, because inflation is here right now. Even though they're masking it by having 0% interest rates, the fact is inflation is here. Oil prices are back up to almost $100. Food prices are skyrocketing, and the U.S. dollar is extremely weak. That's a recipe for heavy inflation, which is one of the major reasons why we recommend gold, silver, and diamonds, hard assets.
There's only one company that Harold recommends that you use when it comes to investing in precious metals. That is Worldwide Precious Metals. Their website, wwpmc.com, wwpmc.com. The telephone number, 1-866-623-2002, 1-866-623-2002. They can help you start your own precious metals investment account today. If you'd like to receive our free weekly newsletter, we send it out via email free of charge every week. Get your name on the list by going to wwpmc.com or 1-866-623-2002. Give that number a call, and they'll arrange for you to get our free weekly newsletter. Morris Hubbard said this week, the time window for the gold correction is coming to a close, and obviously we saw that this week. Look for 2,000 by January 2012. My chart projects that gold has a very long ways to go on the upside. What I have termed Phase 2 is a stage of the bull market that will show investors extreme volatility. Gold is likely only at the very beginning of a new and substantial uptrade. And he actually says that on the silver side of things, silver is a highly volatile metal, but it could bring some serious rewards if you're patient and buy really serious weakness in the price. And he says commercial smart money buyers now appear to be even more bullish than they were at the lows of 2008. And we've heard that before. COT reports coming out and saying, Gene Ahrensberg saying that this is the best silver has looked from a Commitment of Traders report. Also, Stephen Lieb coming out and talking about silver silver. He says China has well over 50% of the solar industry, and no doubt, as part of that strategy, has been accumulating massive amounts of silver, and they will continue to do that. This is one reason that silver is certainly headed to 3 digits. And we have about 6 minutes left in this segment, Harold. We talked about last week a London trader saying that when gold dipped down, there was heavy buying out of Asia. Well, he was interviewed by King World News again, and he said that when it comes to silver, the price of silver has no reality to the paper market at all. Absolutely zero reality there anymore. There is extraordinarily tight supply right now in Asia. When you order silver, there is so little available at these prices, that's the trouble. You can order it all day long, but when are you going to get it? How long are you going to have to wait for it? Chances are you're not going to get quantity at this price. If people have physical silver that they are not selling at these levels, that is definitely the case. He says supply-demand is tight, and you know there is a big weight involved in getting your silver. If I put in an order for tonnage, I have to find a wholesaler that actually can source it at this price, and then there is a significant wait time. He says in Shanghai, they are seeing premiums of $1.50 on silver, and that is obviously an everyday occurrence. The tightness in the market is the reason why the Chinese buy massive tonnage of silver. They have to wait to receive the physical silver. That's obviously the downside. The end users are in line in front of them, so the silver market's on a razor edge because they're trying to make sure that the industrial users get their silver. Otherwise, all hell breaks loose. So you have people trying to buy it as an investment, Harold, and then on top of it, you have the industrial users trying to get what they need, and we're hearing tight supplies out of Asia. It's not a surprise. I think as this Commitment of Trader report has shown over the past couple of weeks, we are set up for some major moves potentially in silver in the weeks and months and years to come.
You better believe it. And I believe that to be 100% true. There is a big difference between the futures papers market, which are very heavily leveraged, and the cash market, the physical market, and that's always what we have recommended ever since we started the show, was to own the physical metal and not trade in the heavily leveraged futures markets.
We have about 4 minutes left here in this segment, Harold. The telephone number to invest in precious metals, 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com, wwpmc.com. If you'd like to receive our free weekly newsletter, all you need to do is connect with Worldwide. They'll be happy to send it out to you free of charge. One of the stories that really caught our attention this week focused on the housing market. It really comes down to jobs, and it comes down to housing in the United States. The jobs need to come back, and people need to obviously get on solid footing when it comes to the housing market. Home prices in the United States fall more than 3.8%, according to Case-Shiller. Home prices in 20 U.S. cities dropped more than forecast in August, highlighting one of the major obstacles facing the economic recovery in its third year. The S&P Case-Shiller Index of property values in 20 cities fell 3.8% from August 2010. And also, there was another group that came out and said U.S. home prices fell 4% in August from a year earlier. That is FHFA. And they say that it just goes to show that the housing market continues to struggle to stabilize. And it adds on to some major slumps in Colorado, Arizona, and obviously other places like California and Florida as well. Prices are down from the peak about 19% from April 2007. So, Harold, we're in a situation, as we touched on, we have about 2 minutes left here. We're in a situation that the jobs numbers are not good. The housing market is not good. And you have, as you say, social unrest in the United States with the Occupy Wall Street movement. It's a very interesting time. You add to it the EU situation, and there's unrest over there as well. It's a very dicey time when it comes to investing. A lot of landmines out there. People need to be careful.
You better believe it. And that's the reason that we're coming to Edmonton on November 28th to do the seminar, to clear up a lot of the mysteries of what is happening at this point and what's going to happen going forward. So, again, the seminar is on November 28th. It's at 6:30 at night. It's on a Monday evening. It's a free seminar. We want everybody to attend. I'm going to be there. Randy Marshall's going to be there. The people from Worldwide Precious Metals are going to be there. We've got an amazing presentation from Argyle on diamonds. It's going to be an amazing seminar, and I believe everybody who walks out of there is going to have a clearer understanding as to what they need to do going forward.
This Randy Marshall guy, never heard of him. I hope he does a good job. We're going to talk about diamonds here shortly. It was a fantastic week for diamonds. Harold's website for diamonds is rarecoloreddiamonds.com. Rarecoloreddiamonds.com. You can connect with Harold on the diamond investment front at 1-800-432-1022, 1-800-432-1022. To invest in precious metals. The company Harold recommends you use is Worldwide Precious Metals. They can help you manage your precious metals investment account. You can trade the market if you want to buy or hold your metal. They're the experts in this very specialized market. They're there to help you maximize profit, minimize risk. And now is the time to have, precious metals in your portfolio. It's just critical. It is a liquid asset you can buy and sell with a phone call. Keep that in mind. We're going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on October 28th, 2011. Our time is 9:10 Mountain, 11:10 Eastern. Radio show runs 6:30 CHED in Edmonton, AM 640 in Toronto. If you ever miss a radio show, you can catch us online at HESradio.com. Don't forget, Harold is coming to Edmonton. He'll be at the Fantasyland Hotel in Edmonton, West Edmonton Mall, 6:30, November 28th. If you'd like to sign up for tickets, go to Harold's website, HESradio.com, HESradio.com. And I would do it quickly because obviously, it's been very successful so far. As Harold was saying earlier, 600 people have signed up to date. Go to Harold's website, HESradio.com, to sign up. Harold's website for diamonds is rarecoloreddiamonds.com, rarecoloreddiamonds.com. To connect with him, the telephone number 1-800-432-1022, 1-800-432-1022. If you'd like to receive our free weekly newsletter, Harold will be happy to send it out to you. Our featured diamond this week, and it ties in with the fact that the Argyle Pink Diamond tender has now been completed. I'll let Harold talk about that. This week's diamond is a .25 carat round, brilliant, fancy, intense, purplish pink Argyle. Argyle pink diamonds are admired as the most concentrated form of wealth on the earth. And Argyle, obviously, we know their diamonds are extremely rare. The round cut is considered the rarest for a colored diamond, and very few exist. This is an excellent investment diamond that increases in price potentially 25% a year. And when the Argyle mine does close, here we're looking at about 2018, 2019, maybe sooner, then obviously, Harold, it's your opinion that we could see the prices go exponential when it comes to the pink diamonds from the Argyle. They supplied 90 to 95% of the world's pink diamonds, so we're in a scenario that when those diamonds are no longer coming out of the mine, we've seen it with the blue diamonds in the past with other mines, the prices go up substantially.
You better believe it. The Argyle pink diamonds are amongst the best investments that you'll ever make. The fact is that they're so rare and so few of them available. Don't forget, most of the Argyle pink diamonds that have been sold over the years have been sold in jewelry. So the fact is that these are investment diamonds that go up about 25% a year. They have never, ever dropped in price because there's so few of them available. The fact is that the Argyle mine produces 95% of the world's pink diamonds, and that mine is going to close before 2018. In actual fact, it looks to me like it's going to close by about 2016, which is only 4 years from now. Give it 2 years for all the diamonds to run out, and you could see the price of pink diamonds 10 times what they are today. We've recently seen that with blue diamonds in the same scenario, and now pink diamonds are starting to reflect the same thing. The thing about the Argyle pinks, pink diamonds are amongst the most popular. They're absolutely stunning, gorgeous diamonds, and only about 200 carats a year come out of the Argyle mine. That means that if you lay your hand out flat and you pour the whole year's production into your hand, you're talking about enough diamonds just to cover the palm of your hand. That's how small this market is. And these diamonds are extremely valuable. They're very sought after. And what Argyle also does is that they not only cut and polish their own diamonds, and they laser inscribe them, then they send them to GIA, Gemological Institute of America in New York, to get them graded. But on top of that, they also select their top 55 diamonds every year. And this is called the Argyle Pink Diamond Tender. And they select their best 55 diamonds, and they take them on tour to 6 different cities and show these diamonds privately to very high-end jewelers and dealers. And we get to bid on these diamonds. You get one bid per diamond, and you find out, down the road whether or not you were successful in bidding for that diamond or not. Last year in 2010, I was successful in winning 4 of the Argyle Pink Diamonds, and again, these Argyle Tender diamonds will literally take your breath away. And investment-wise, these diamonds do better than the Dow, the Hang Seng, any of the indexes. These are very, very safe investments that never, ever go down in value. In fact, they say that the Argyle Pink Diamond is admired as the most concentrated form of wealth on earth. And the thing is about these diamonds is when the mine closes down and there's no more of these diamonds available, we believe that the prices will increase 8 to 10 times what the prices are right now. Means that if you bought a diamond for $30,000, that diamond could be worth $300,000 10 years from now. Now, most of my investors and clients that buy these type of diamonds, and I own them also myself, we put them away for safekeeping. These are the only assets that, number one, do not decline in value because, number one, there's so few of them available, and number two, they don't trade on exchanges like commodities and stocks and those type of things. Number two, the fact that, again, the mine is going to close and there will be no more of these diamonds, 95% of them will be gone from the market, again, creates a supply and demand situation. With the world financial markets the way that they are, with countries in Europe going bankrupt, with the U.S. owing $15 trillion and the economy sinking, the biggest reason to buy diamonds, aside from the fact that they're one of the safest investments that you can make, and over time they do profit tremendously, but they're also portable and private wealth. Nobody knows that you own them. If you ever had to cross a border, start all over again, it's a liquid asset that you could sell anywhere at any time. So these diamonds are phenomenal investments, but the best thing about them is the way they respond to inflation. In 1979 and 80, when we had double-digit inflation, 20% interest rates, gold had gone from $35 all the way up to $850. Silver went from $1.25 to $52. Colored diamonds went up 500% in 2 years. 500%. That means that a diamond that you could buy today for $20,000 can be a $100,000 diamond in 5 years from now. We recommend the yellow flawless diamonds for that. Yellow flawless diamonds do extremely well. They've never, ever dropped in price. In the 35 years that I've been in the investment business, we have never seen the price of colored diamonds fall in price. In fact, yellow flawless diamonds go up by 25% a year. They double every 4 years in price. And during times of high inflation, they do as well, if not better, than any other hard asset. In fact, again, yellow flawless diamonds went up 500% in 1980. We do have diamonds in the $20,000 range, and these are all flawless yellows, all over a carat, and absolutely beautiful. Of all the colors of yellows that you can buy, we only deal in the 3 highest colors, which is fancy yellow, fancy intense yellow, and fancy vivid yellow. And again, a diamond that you can buy today for $20,000 in 10 years from now could, in 5 years from now, with inflation coming, could easily be an $80,000 to $100,000 diamond. It's done it before, and is starting to do it again. The other thing about these diamonds is that they're almost impossible to get. To get a flawless yellow diamond, do you realize that most jewelers have never seen a flawless diamond, let alone a colored flawless diamond? So I'm very strongly recommending that you look at the yellow flawless and the Argyle pink diamonds. Put these diamonds away for the longer term. If you you don't want to own these diamonds for a year or two. You're not going to make any money. But you want to put them away for the longer term. My clients that own these type of diamonds primarily buy them for retirement. You certainly cannot trust the stock market and the mutual fund market anymore at this particular point, especially when it comes to, retirement and that type of thing. Now, I'm suggesting that you take some of these diamonds and just put them aside in your safety deposit box, or in the case of these pink diamonds, which are the most beautiful diamonds you've ever seen, we put them into the most beautiful jewelry settings. Our beautiful diamond rings are all made from platinum, matching white and pink diamonds. We have red diamonds inside of the band as our signature. These are the most beautiful diamond rings, and when they go to auction, and we do sell your diamonds for you at auction, these diamonds sell for a literal fortune. In fact, in the newsletter this week and last week, you can see the auction results from the auctions that happened last week. And I'll tell you, what's happening at auction is unprecedented. The price of these diamonds are going up so much more than what the experts at Christie's and Sotheby's are stating that they would. For example, diamonds that they estimated would sell for $100,000 sold for $190,000 and $200,000. It's the time to be in these type of hard assets. If you go back into history, you'll find that hard assets do extremely well during times of financial turmoil, mostly during times of high inflation. We believe inflation is not only here now, but we're going to see inflation to the magnitude that we saw back in the late 70s, early 80s. We believe that over the next 2 years, the Federal Reserve in the United States will keep interest rates basically at zero to try to get the economy back on track. But what's going to happen after that, they're going to have to raise interest rates substantially. And back in 1979-80, when inflation was skyrocketing, interest rates went all the way up to 20%. And even with that, gold, silver, and diamonds made those gigantic moves. So again, we're very, very bullish on the hard asset market. We've been recommending gold and silver for the last 10 years when nobody else was even talking about gold and silver. We started buying silver at $3.80. Many of our clients 10 years ago would buy physical silver, 10,000 ounces of silver for $40,000. Now it's worth $350,000. The same thing is happening in gold, and the same thing is happening in diamonds. My strongest recommendations at this point is to get out of the very risky stock markets, or at least lighten your position there. What you can basically do, if you're in mutual funds or stocks and you're as concerned about the world economies as we are, and again, the way I look at the stock markets, if you're looking at investing in stocks that are U.S.-based, and most mutual funds are, the fact is you're investing in a company that's basically on the verge of bankruptcy. The United States is nearly bankrupt, owes $15 trillion, and cannot pay their debts. All these situations will lead to extremely high inflation, with oil prices close to 100 and food prices off the charts now. That's why you want to be in the diamond market, because the diamond market will respond to these situations as strong as any other assets. So again, we're continuing with our strongest recommendations. Gold, silver, and rare colored diamonds will not only get you through these extremely difficult times and help you deal with inflation, it's also going to give you an opportunity to profit tremendously when most people are not making money in these markets. When you come to our seminar, you will learn all about the world economy. You'll learn about what's happening in Europe and the United States and Canada and all over the world, and what's going to happen with the currency markets, the metals markets, and other investments. You're going to have a seminar and a presentation by the people at Worldwide Precious Metals, which is going to be a phenomenal presentation. And then I'm going to do a presentation for you on rare colored diamonds, the likes that most people have never seen before. We've actually cut a diamond that takes 3 months and videoed it and reduced it to 3.5 minutes. You're going to see how a diamond is cut and polished. You're going to see how it's set, and you're going to learn all about what's going to happen over the next 5 to 10 years in the rare colored diamond market. So I'm very excited to be coming back up to Canada. As most of you know, I'm Canadian myself, but I live in the States at this time. We will be coming up to Edmonton, and you can sign up for this free seminar. We don't want anybody paying to come to listen to us speak, so we're taking care of that, and again, it's going to be an amazing time. So sign up for HESradio.com, and the tickets are free, and we're looking forward to seeing you in Edmonton.
Speak with Harold about diamonds. Talk to him at 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. If you'd like to receive our free weekly newsletter, Harold would be happy to send it out to you. Should mention, we have stories this week about the Argyle Pink Diamond Tender. You'll want to read that. 55 stones mined at the Argyle mine in Australia, cut and polished, travel around the world. There were bidders from all over the world. Those bidders, it remains completely 100% private, the ones that won the bids on those 55 stones. But I know that eventually Harold, I would imagine he will have them in his hands and get them into investors' hands. We also have a story this week about the world's largest vivid yellow diamond. It's expected to go for $15 million at auction. It's the Cora Sundrop gem, and it's going to be auctioned off. In fact, it was last year that the Graf pink diamond, a fancy intense pink diamond of almost 25 carats, sold for $46.1 million, setting a new world record for any jewelry auction. And Ritchie Auctioneers in Toronto, they're actually putting on an auction in November. It includes an 18-carat fancy yellow diamond appraised at $1 million and a 78-carat fancy yellow diamond necklace appraised at $600,000. Christie's, they're having a $100 million auction in Hong Kong. And we have info on that. Graf, a Graf diamond ring, Bulgari, and private collections highlighting Christie's Geneva auction is coming up, and they're going to be auctioning off fancy yellow diamonds, a 79-carat cushion-shaped diamond weighing an estimated well, I guess they actually don't give the weight here, but the estimate on it is 1.5 to 2 million. Actually, it is a massive diamond, also a 67.54 carat brilliant cut diamond brooch, estimated to go for 1.4 to 1.5 million, and a 32 carat brilliant cut diamond ring. The estimate on that is $700,000 to $800,000. We also have, Harold, something that you took a look at. I really encourage people to read it as well. It's the 10 most expensive pieces of jewelry ever sold at auction. And you actually go through that list and you see the majority of them are natural fancy colored diamonds. When I saw the story and I was clicking through, it was a colored diamond, another colored diamond, another colored diamond. It was amazing to see. I encourage people to get that info from you because they can see those diamonds and the prices associated with them.
You bet. It's such an exciting investment, and again, you open up your investment portfolios and your invoices and whatever, your statements at the end of the month, and you're so depressed by what your other investments are doing, but when you look on your wife's finger or you look in your safety deposit box and you have one of these amazing gems, they're just absolutely beautiful. The other thing is, don't think that you have to be a multimillionaire to invest in these type of diamonds. You don't. In fact, most diamonds that our clients look to purchase are in the $20,000 to $50,000 range. So the fact is that you can get into a beautiful yellow flawless diamond that, again, goes up by 25% a year every year, and the fact is response to inflation extremely strong, and you can get involved in the markets for around $20,000. So, again, I'm very excited about what's happening in the diamond market. Again, we brought yellow flawless diamonds to the market about 6-7 years ago to our clients, and now all you're hearing at auction is how much these diamonds are selling for. They're selling for fortunes. So again, I couldn't be happier with our recommendations. Gold and silver have done extremely well. The diamonds are doing well. Again, the diamonds are a longer-term investment. You do not want to buy them for a year or two and then sell them. You're just not going to do well with them. You want to hold on to them for the next 5 to 10 years, and I think that you're going to do extremely well financially, and it gives you all that safety. Europeans call colored diamonds real estate in your pocket. You could literally walk around with $1 million diamond in your pocket and nobody would even know it's there.
One of the interesting stories, too, in the newsletter, speak with Harold about getting it sent to you. Go to his website, rarecoloreddiamonds.com, or talk to him at 1-800-432-1022. We've heard of precious metals vending machines. Now they actually have diamond ATMs. So there's precious metals ATMs. Now there are diamond ATMs. And Harold, it doesn't surprise me. The world is moving away from paper more to hard assets, physical assets. They're seeing what the currency markets are doing. If you're in Greece, you don't want to be holding the dollars that they have over there. You want to obviously be holding hard assets that will hold their value. And this diamond ATM, it'll be interesting to see if it spreads around the world.
I'd be surprised if it did, to be honest with you, but you better have a nice American Express black card to be able to buy one of them. So, anyways, again, most of the diamonds that we offer go to our Canadian clients. We've got beautiful diamonds. We ship the diamonds directly to you. We have our own auction business that will be coming up in November, and it was built to sell our clients diamonds and everything for them. So, again, we're heading into the most exciting times. Again, I'm looking forward to coming up to Canada to do the seminars, but all in all, the diamond market, the gold and silver markets both look excellent at this time.
The telephone number to connect with Harold, speak with him about investing in diamonds, the seminar, 1-800-432-1022, 1-800-432-1022, the website, rarecoloreddiamonds.com. You can get our newsletter from Harold or worldwide. There's only one company Harold recommends you use when it comes to investing in precious metals, Worldwide Precious Metals. Their website, wwpmc.com, telephone number 1-866-623-2002. Harold's been doing the show for 10 years. Worldwide has been around for the entire time of this bull run in precious metals. They're the experts in this market. Have there been other Johnny-come-latelys start up and do other shows? Yes, they're copying us. You know it. We know it. But give Worldwide a chance first to earn your business. Connect with them. 1-866-623-2002. The website, wwpmc.com. You can get our newsletter from Harold or Worldwide. One of the stories that caught my attention this week as well, and it's not a surprise because this has been ongoing. The Pennsylvania governor declared a fiscal emergency in their capital. Tom Corbett declared an emergency in Harrisburg that allows him to assume financial control and name the state's first municipal receiver. That's right. Harrisburg has gone into receivership, and that has been an ongoing thing. Of course, there's Jefferson County in Alabama that's in severe trouble. The United States are facing a total debt of over $4 trillion. That includes pension liabilities. California and Vermont. California owes the most, Vermont the least. And we actually have a story in our newsletter, the 10 most debt-ridden states in the United States. And people are probably wondering about the banking situation. We haven't really talked about it in quite a while, but regulators have now shut 84 banks in the United States. Banks in Georgia, Florida, Colorado, shut down by regulators on Friday. They do it every Friday. The payrolls in 25 U.S. states declined, and we have that story as well. And something that I thought was quite interesting, and that is consumer confidence, and this is no surprise, drops to a 2-year low in the United States, back to right around the time the financial crisis started. And you're seeing that people are very, very concerned about not only what's happening geopolitically, but in their own backyard as well. In fact, in the United States, the middle class, their portion of what they've been earning compared to the top 1% is definitely dwindling, and we're seeing that with the Occupy Wall Street movement. People are not happy. They're very upset. Harold, we have about 2 minutes left here.
Well, again, it's extremely important that we keep up to date and you understand what's happening so you don't make any errors because, again, the next 4 to 5 years are going to be extreme in the markets. Either you're going to preserve your capital and make some money, or the chances are, if you don't pay attention, you could lose it all. We want to come up to Canada to help you understand what the ramifications are and what's going to happen over the next 4 to 5 years, especially going into 2012, which is going to be an extreme year. So we are coming up. You can sign up for our seminar on HESradio.com, HESradio.com. I'm very much looking forward to meeting all of my friends and customers up there. And again, I wish everybody a wonderful weekend and a very, very profitable day.
And Harold, you were mentioning if people wanted to meet with you personally, they can on that Tuesday, right?
Yes, that is true. Monday and Tuesday, all you would have to do is fill out that you would like a private meeting with me, and I will definitely make that happen. So, again, I'm only going to be up there for Monday and Tuesday. There's a lot of people that want to see us. But, again, if you want a private meeting with me in regards to learning about diamonds and that type of thing, it would be my pleasure to sit down with you. The appointments will be for an hour, and again, I've got a private room so we can sit down and discuss everything in total privacy.
Thank you very much, Harold Siegel.
my pleasure, and I wish Mark a very, very happy birthday. He does a phenomenal job for us.
That's right. RareColoredDiamonds.com, the website. Telephone number to speak with Harold, 1-800-432-1022. Worldwide Precious Metals. Give them a chance to earn your business. WWPMC.com. The telephone number, 1-866-623-2002. Don't forget, sign up for our free seminar, November 28th, Fantasyland Hotel, 6:30. It should be a great time. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.